Good morning, everybody. Happy Monday. Happy Earth Day. It's April 22nd, 2024. Great to be with all of you today. My name is Bob Lang. It's time for our Daily Bites. We bring these to you every Monday and Thursday morning, roughly around 8:30 in the morning Eastern Time, and talking a little bit about the markets, a little bit about the economy, inflation, the Fed, charts, technicals, so forth, anything else that kind of springs upon my mind to discuss with you and help you learn and move forward about trading and investing and getting ahead. So just one thing I was going to tell you. Some of you may know I play a lot of tennis, and I did hear something very, very interesting. A nice quote about tennis. It kind of applies to trading as well too. And that goes like this. Somebody once said, in tennis, I never lose. I either win or I learn. So I think we can apply the same principle to trading too, right? So you don't lose, you either win or you learn. I think that's a good positive way to look at positive aspect to look at markets, look at trading, and look at where we are. And how we respond to difficulties, adversity, that sort of thing. And if we're learning, we're not losing. So I thought I'd drop that on you guys as well too. So this morning, we're making a little bit of a comeback from Friday's shellacking. Actually, the Dow Industrials were up strong most of the day on Friday, pulled back a bit. The S&P 500 was down about 45 handles or so on Friday, trying to get some of that back. It's about halfway recovered from Friday's losses, but last week was a really big drop in the indices, especially in the Nasdaq. I'm going to show you what that looks like right now. Let's see here, S&P 500 was down. Take a look here. I'm going to show you in comparison to what the explosive options portfolio did. We were actually up 1% for the week. S&P 500 was down 3%, so that's 4% of outperformance for the portfolio. We're actually up 13% this year. The S&P is only up 4%. See how bad the Nasdaq did last week, was down 5.4%. A lot having to do with Apple being down a lot, Microsoft. NVIDIA, of course, was down a lot, especially on Friday, down more than 10%. And a lot of people are trying to figure out whether that's going to bounce pretty hard. I think it's going to get a good bounce in front of the next earnings report, which is coming out in about a month. But, you've got to wait and see if that bottom on Friday holds as well, too. So Russell down 283. It's down 3.8% for the year. Small caps down 3.8%. And don't forget, remember, going into the first week of November, small caps were actually down about 10% last year. So they gained a lot of ground. We finish up 13% or 15%. Gained a lot of ground in November and December. We were down close to 10%. So we've only really had a good, 4 months or so of good performance from the Russell 2000, and it's really had a bad month of April here. You see, it's down 8%. Now, of course, we've got 5, 6, 7 days left of trading in April, and I suspect 8% down is a little bit too much. We're probably going to get some relief back in the Russell 2000 at some point in time this week, or maybe early next week. Next Tuesday is the last trading day of April. So we'll see what happens. I've also been taking a look at the 10-year yield, which is rising. Last night we saw the 2-year yield tagging 5%. Hasn't done that in a while, so that's going to cause a little bit of angst for bond traders and also equity traders as we see yield rising up. We see the 10-year pushing back up towards 4.7%. We have a gap to fill up back over here, and that's from back in October. We have a gap roughly at 4.789%. That was a close on that day. And once that gets filled, maybe we can figure out what's going to go on. But that would be another 100 basis points higher on the 10-year yield. So that would not be good for bonds and for equities. But I think that if we get back up there, it would probably be pricing in 1, maybe 0 rate cuts in 2024. Now, we heard last week from several speakers, Neil Kashkari from Minneapolis, Mary Daly from San Francisco, Cleveland Fed President Loretta Mester, and a couple of others, Mickey Bowman, one of the Fed governors, stating that they believe that it's very possible that we would have 0 rate cuts in 2024. Raphael Bostic from Atlanta, who is a voting member this year in 2024, stated that he's more in the camp of 1 rate cut, and we'll see what happens. That is probably, now it used to be the hawkish view. Now it's probably more of the dovish view of the committee right now. So we'll see what happens in the next few months. I think we have the personal consumption expenditures, which is the PCE, coming out on Friday morning. That is an important number because the Fed pays very close attention to consumption and expenditures, and then that inflation number as well. Thursday morning, of course, before the market opens, we will have the first print of first quarter GDP. And some are looking at probably 2.3 to 2.5%. But what's important is going to be seeing the price deflator and also seeing where the inflation is, where that growth was being driven by inflation or was being driven by productivity. And we'll see productivity numbers and labor costs next week. So it's important to pay attention to the data this week. Show the S&P 500 chart here. On a daily basis, you can see how far this market's come down. It's come down a good 5.5%, almost 6% since the highs reached at the beginning of April. And it's been on pretty strong turnover. So what does that mean? That means the market is under distribution right now. When the market is under distribution, it doesn't really much matter what the news is, whether it's earnings or something like that. People are going to be using these pops to sell stocks, distribute stocks, right? Now, at some point in time, we will move from a condition of distribution to accumulation, right? But trying to pick and choose what day that's going to happen is a fool's errand. It's just not the right way to proceed. You got to wait till something happens for that to occur. And what are we looking for? We're looking for the stock index, like the S&P 500, to stop going down. Once it stops going down and you don't make lower lows, then you've got something to work with. It doesn't necessarily mean you go all in at that point in time. No, of course not, because we're not bottom pickers. I think looking for tops and bottoms is a complete loser's game. We don't want to be losers by trying to pick bottoms over here, right? So but we can certainly see on the S&P 500 chart, the support line is coming in here, and we're at a moderately oversold condition right now. The oscillators are about minus 120 to 170. So we could certainly bounce, whether we tag this 100-day moving average or not. Certainly that's rising, and if it rises up a little bit more and we make a little bit of a lower low in that S&P 500 and we tag that 100-day moving average, we could certainly bounce off of that. But don't forget, the shorter term moving averages like the 10 and the 20 and the 50 are all above the current price levels right now, and we're getting crossovers on some of those moving averages. My good friend Tom McClellan from McClellan Oscillator calls this a rainbow convergence, a type A rainbow convergence here, which means that a lot of these moving averages start converging over here, and there's a bit of a respite in the trend, which is now down, which has been established. We may pop right back up again and come back down. So whatever low is made, whether it was Friday or whether it's today or whether it's later in the week, whatever low is made is going to be a key level for the markets to hold. Key level for the markets to hold if the trend is going to shift from bearish to bullish, and we're going to resume some upside movement. As it is right now, you can see the moving average convergence divergence, the MACD, on this pane right over here, pretty well oversold. We can see the market, the Chaikin money flow is also in negative territory and has been since the end of March when the markets were at all-time highs. So check that out. Money flow flipped negative. MACD flipped negative before the market started to decline, right? So the indicators are telling you there was some warning signs were on the horizon. All right, and then I want to show you a weekly chart of the S&P 500. Let's take a look at that, and really, basically, what I want to show you. This is what I share with TheStreet.com portfolio subscribers and Real Money Pro. Once a week, every Monday, I send this out. So we had this nice long channel over here, started to narrow a little bit, and we saw the first green bar 2 weeks ago, and we followed through over here, and we saw some dojis up here, which means that indecision. Dojis mean indecision, especially when you've got the doji looking like a plus sign or a cross right in the middle over here. The MACD on the weekly chart has turned lower. The stochastics on the bottom broke the trend here, right? And we can see that RSI has fallen sharply over here and is heading lower. So what does it tell you? Be unbiased and just read what the chart's telling you. The chart is telling you the market is in trouble over here. So where can we see some support come in? On this weekly chart, I've outlined the this is the 14-week moving average, the McGinley, and that could come in at around 47.78. That's about 190 handles lower than where we are right now, you know, that could be just another, like I said, another 4% down. That would put us down to a 10% correction period. And if we are oversold at that point in time and we get to that level, then, you know, it might be time to pick up some ideas, because I don't think that we're heading into a bear market over here. But that's just my opinion based on the monthly chart of the S&P 500, right? We always look at that monthly chart of the S&P 500 as our indicator, our market indicator of whether we're in a bull or a bear market, right? And it's all based on the MACD. Well, you can see the black line over here is starting to stall because of this this poor month of April. It would require this turning down and this red line turning back up, continuing up, and this one turning down over here. We have a lot of room here between 271 and 196 on these two lines over here. So there's not really a worry that we're going to heading into a bear market in the next couple of months, but we could get down there, right? If we have a bad month of May and a really bad month of June, these lines are going to narrow, right? So I'm just telling you what's the scenario. I'm not hoping for anything. I'm just paying attention to the indicators and proceeding with what they're telling me to do. Okay. So I think the old highs back here from early 2022 are important, are in play for a test that comes into at about 48.17 on the S&P 500. So pay attention to that. And again, we got almost modestly overbought on this monthly chart, and now we're coming back down for a bit of a test here. So let's see what happens. We have a lot of earnings coming out this week, a lot of big earnings. We have Microsoft coming out this week on Thursday, along with Alphabet, Intel, Snap, Roku, also on Thursday. But earlier than that, we have Meta on Wednesday, along with IBM, Ford, Chipotle, ServiceNow. Later today, we'll have Cleveland Cliffs, Cliffs Natural, Nucor, SAP, Cadence Design, and then tomorrow morning's a big one. General Electric, General Motors, UPS, Pepsi, Lockheed Martin, Raytheon or RTX, JetBlue, Spotify, and a couple of other names as well too. So it's a big week. Don't forget Tesla comes out Tuesday night after the close. They've cut prices on their cars over the weekend, and the stock is down a little bit this morning as well too. So it's down another $6.50, $140. So it's always surprising what Elon Musk is going to say, and he could say something to shake the trees a little bit and put a little bit of a shiver in the bears. The market has taken Tesla down quite a bit from recent highs. I think it's down like 45% in 2024 already. So is it down enough? We don't know. We'll find out what happens. But you know what? I think this is a good time right now. Step back a little bit, watch the markets, pay attention to what's happening around you, and then don't jump into stuff. You know, try and take some risk in front of earnings right now. I think it's kind of a foolish thing to do. I'm not doing it right now. I mean, there's a time for that. I mean, April is really notoriously a tough month when it comes to earnings, first quarter earnings. But back in January and February, we were taking a lot more risk because there seemed to be an insatiable appetite for buying stocks just a few months ago. It's not there right now. So we have to pay attention to what's going on and just make plays and make trader ideas maybe after the fact. Okay. Are Meta's earnings going to be good? Probably. Amazon's going to be good later on next week. Probably going to be really strong. Okay. I'm not saying that the earnings aren't going to be good. I'm just saying that you have to wait and see what the market reaction is to some of this news and some of these earnings. Let's see if interest rates start coming back down again. Let's see if inflation turns back around. And if there's money flows start coming into the markets, there's going to be plenty of time to catch up and grab some ideas. So that's going to be it, everyone. Have a great day. Have a great trading week. I will see you guys all back on Thursday morning before the market opens. I appreciate all of you spending a little bit of time with me. We'll have the chart of the week coming out on Wednesday. Don't forget to read the market blast every single day. I had a good one out this morning. And I appreciate, again, everybody spending a little bit of time with me today. And good luck with trading today. And if you're in the chat room, I will see you there a little bit later on today. Take care, everyone. Bye.